Hey everybody, Boris, also BK Force. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, pound dollar for May 7th to May 11th, 2018. Buckles. The big question going forward is the dollar have enough juice to really confirm its rally? So front of this week, we really had a relatively strong dollar rally that fizzled as we hit the non-farm payrolls because non-farm payrolls, frankly, were incredibly disappointing. Wages were weak. The job numbers were just okay. And overall, the tenor that you get from not just the US, but across the whole G11 universe is a synchronized global slowdown, which makes it extraordinarily difficult to maintain a tightening monetary policy going forward with any kind of a straight face. The Fed has been sort of uniformly hawkish all the way through the beginning of this year. But we were supposed to be at 3% rate at this point, and we're nowhere near close. As a matter of fact, we're sliding backwards. And of course, Europe is sliding backwards. UK is at a 1.5% growth rate. The key question here is, are we really moving much more towards a recessionary scenario, which nobody is even contemplating at this point, rather than a hugely expansionary scenario? At this point, is monetary policy hurting more than it's helping by tightening as the Fed goes forward? And I think the market is really going to start to rethink those ideas as we go forward. This week, the major component for the dollar is going to be inflationary data. That's going to be the key tell of whether there is further juice in a dollar. Having said this, though, of course, nothing else is really performed well. The dollar has basically done well against the euro and the pound because of their own internal problems. But the key thing to me is the fact that dollar yen did not break 110 and has not been able to do so as we close out the week. And until it does, that whole confirmation of a dollar rally remains to be a big question mark. For now, the euro continues to slide, but is maybe in the process of finding a near-term bottom around the 119. We'll have to take a look. I'll show you the charts of how they set up. The dollar-yen trade is still this 108, 110, and I think in many ways what could be highly surprising and incredibly frustrating to a lot of bulls is if we dip below the 108 level. Because if we dip below the 108 level this week, that will destroy the whole upward trend of the dollar and create a lot of technical damage as we go forward. And cable, of course, is going to be all about the BOE that is going to be coming up on Thursday, so we'll be focusing on that as well. Let's take a look at the calendar and see the events of the week. The U.S. side is relatively quiet. The main thing on the U.S. side, as I said, PPI on Wednesday, then CPI is on Thursday, I believe, and that's it. Those are the key things. Now, we are expected to have an increase in CPI on the core side from the month prior. So we'll see if that has a positive impact on the dollar. But so far, inflationary pressures have been relatively mild. Although we are mildly bullish, the PPI numbers, because they have been higher prices on the manufacturing side. Not a surprise, by the way. Of course, oil is up significantly. So I would think that some sort of inflationary pressure are going through. But on a core basis, that's really the key thing. I don't think you're going to be seeing too much inflation as we go forward. Europe has virtually nothing on the calendar this week, so there is no major event risk there. And of course, the other big event risk among the majors is going to be the UK, the BOE rate decision. I'm sorry, I'm looking at all the UK data. You have the trade balance data, industrial production, all of that is going to be secondary. But the much more important part will be the Bank of England rate decision, which has gone from 90% yes to only 10% yes at this point as far as futures go. The market is really discounting any possibility of rate hike given the massive deterioration in UK data. Now, UK data got hit very badly by bad weather in Q1. The assumption was that Q2 was going to come back with a vengeance, and so far it's not come back with a vengeance. It's really been just a very tepid rebound, and that's why the market is much less enthused about the idea of a potential rate hike out of the BOE. There is a potential, though, I think, that the BOE could simply do a one and done. They could just surprise the market by raising the rates and then staying stationary for the rest of the year. Will that be positive for cable? It'll be mildly positive for cable for sure, because the market is not counting any rate hike right now. And I think to that extent, cable could bounce a little bit. But even if they do this, they certainly are going to communicate, I think, a much more cautionary stance going forward. And whether they're really willing to tighten policy against a 1.5% growth rate really remains to be seen. If they decide to delay, that I think at this point cable is so sold off that the negative push on cable could be mild, but there's still maybe about 100, 150 points more of downside in cable before it finds any kind of meaningful bottom. So I'd be watching it very carefully. That's really going to be, as far as event risk, the seminal event of this week on Thursday. Let's take a look at the charts here, see how everything sets up. So what you see on the charts is that the euro is finding a modicum of support against the prior support level around the 119, right? Really, if you want to give yourself ample room for error, it's the 118.50, 119.50 corridor that really does look like it should be a relatively decent support area. We have stopped making fresh lows. That's a good sign if you're looking to bottom fish. And maybe another day of bottoming out, you have a reasonable chance for just an anti-dollar flow back up towards the 120, maybe 120.50. The most I think that this short covering rally kind of goes to is 121 before it hits a lot of resistance and the natural downward trend reasserts itself. There's nothing on the European side that makes you want to buy euros. Whatever move we have is really going to be sort of dollar short covering that we see here on the move, or dollar profit taking, dollar profit taking that could drive us back to 2050 just on profit taking flows alone. The key thing to watch is no further lows. Once the sellers have kind of exhausted themselves, the natural flow is going to go back up in order to push the market around. Now, dollar yen, on the other hand, is a much more interesting trade because, yes, it's in a clear uptrend. It looks still as a buy to dip territory. And today's price action is sort of encouraging to the bulls because they brought it down to 108.50 and brought it back up. And if this is the last, if this is the lows that we see for the next day or two, that's a very bullish sign. But I'd be very, very cautious because I think we revisit. And the key thing here is really if they're going to be able to probe the 108 level with any kind of degree of conviction. Because a break below 108 converts this very beautiful uptrend into essentially back of range and a failure, a failed uptrend. 20 SMA comes up around the 108. That whole area here really becomes a big test ground for just how strong this bullish case is for the dollar. On the other hand, a breakout above 110 really would seal the dollar trend to the upside. And you want to, if we do take out the 110 and whatever positive flows we get, you definitely, I think, want to be buying it because at that point we move into the 110, 112 category, and the shorts get squeezed very badly. At this point, the shorts are trying to really exploit their advantage. But as I said, the true test is going to be around the 108 level. And that could be the test at the beginning of the week just to see how strong the support is for the dollar as we go forward. And of course, last but not least, this trade has just been a one-way move. What an unbelievable distribution to the downside. But we are coming up to this key support level of this 35, 34 level, really 33.50, 35. That's the bottom. Still very hard to try to buy this until you get 1 or 2 days of just kind of mild support here. Of course, end of the week, we're coming up at the BOE, so that could have a major impact. But as I said, I think if the BOE simply stays stationary, it's already so well priced in, we could even have maybe a short covering rally to the upside, kind of a sell the news or, sell the rumor, buy the news type of a story. So I don't see too much downside risk here because so much downside has been priced in. Still, it may be a little bit too early to dip your toe in the water. I think the 34 level certainly provides about as much room for margin for error as you can get here because you get lots and lots of support here from last year, and that should provide a modicum of a bounce back up towards the 36 level as we go forward. So that's how the week shapes up. Should be very interesting as far as cable goes, and it'll certainly be a big look as to how strong this dollar rally is. How convinced are the dollar bulls to take it above the 110 and dollar yen? Wish you guys the best luck, the best of trading. Boris, over and out.